Good morning. Thank you for Propulsion sponsoring FPI and current affairs this morning. So let's scoot right to the Financial Sector Conduct Authority and see what warning came from them. It appears that Stanlib is a bit in the news this morning, not because of something they did wrong, but something that somebody else did wrong. So the Financial Sector Conduct Authority is warning the public to please not do any business with a financial services business and individuals using the WhatsApp account Stanlib WhatsApp Investment Group and Mzwandile Nkobo with WhatsApp account number 069162 7744. Now, they falsely claim to be associated with Stanlib. Stanlib has confirmed, obviously, to the Conduct Authority that these WhatsApp accounts are not associated with Stanlib at all. So please warn your consumers, your clients, if you see that number 069 162 7744, it is a scam. Then also you would have seen on MoneyWeb, thank you very much MoneyWeb for that beautiful article, where the South African Revenue Service hit a businessman with 57 million tax bill over loan accounts. So this is a warning for directors, business owners. So a recent tax court ruling against a high net worth individual known as taxpayer D underscores SARS increasing scrutiny of shareholder loan accounts. The taxpayer was slapped with 57.1 million assessment for undeclared income and interest linked to unexplained increases in his loan accounts across multiple companies that he actually owns. The court found that the taxpayer failed to explain the sources or adequately explain the source of the funds and did not testify, prompting the judge to draw an adverse inference. So the burden of proof, the court confirmed, lies with the taxpayer. We know that. So SARS success in this case sends a strong warning to directors and shareholders. If loan accounts aren't properly managed or explained, they may be taxed as income. So the ruling aligns with SARS' intensified compliance drive, including the Project Amabiliance, I'm sure you're aware of that, which targets undeclared income and tax recovery. Now, SARS is on the Amabiliance drive because we know the VAT increase did not take place, so we need to gather and collect tax from somewhere. Then a very interesting case that came from the tribunal. This is where Standard Bank Financial Consultancy is in the news, but not them. It's one of the representatives that did something wrong. So what did Thapelo Baloyi do? So Jan Baloyi is a representative of SBFC and is also an independent contractor. And he was debarred by the bank following allegations of misconduct. He also applied to the Financial Services Tribunal to have the debarment reconsidered. Why he did that, I wouldn't know. So the main allegations against Thapelo Jan Baloyi is that he asked consumers of the Standard Bank and Secunda for money. And as I read through the tribunal case, he targeted mostly females to borrow money from them, 1,000 Rand here, 2,000 Rand there. And one specific lady over Christmas 2023, he said, you know what, please borrow me 25,000 Rand from your stand-up investment and I will give you 5,000 Rand back over the next 6 months. Now that never happened. What he also did is he solicited 17,000 Rand from a client under the pretext of facilitating employment with Standard Bank for the client's daughter. So the 17,000 Rand is gone. The daughter obviously is not employed by Standard Bank. And what he also did, he failed to declare any outside business, despite being contractually required to do so. So that's where vicarious liability could potentially play a role. But then what he also did is he never returned his laptop, which was owned by the group, back to the group. So in his defense, he denied all of it, and he said he didn't understand SBFC's policies and he didn't know that he couldn't do what he did, etc., etc., and he felt he was treated unfairly. The bottom line is the tribunal said, nope, you will remain debarred. And the debarment was obviously upheld because he misused his position of trust. And I think, Franchon audiences, is the most important. He abused and misused his position of trust and failed to disclose material conflicts of interest. So that's quite a very interesting case, and it highlights why we need to adhere to that code of conduct from the FAI side and code of ethics from the FPI side at all times.